As I have repeated many times in the past, setup number one of the trading plan, that is trading from a support or a resistance area on the 25-minute chart, is one of our strongest setups with a very high rate of success. And in fact, the trading plan includes 5 setups. Each one of them has very strict rules and guidelines, and each one of them is very effective, but the trader must learn to apply each setup in the appropriate market conditions or in the appropriate market environment, as I call it. This is a trade in the Euro USD future contract I took earlier this day, and the interesting part in this trade is that it combines 3 of our setups. That is, it combines 3 of our basic concepts of the trading plan. Let me explain you. As you can see here on the 25-minute chart, this high pivot bearish reversal bar created a big area of resistance here. The next bars retraced to that area, and in fact after 2 bars, this third bar here formed another area of resistance from which we finally traded. This is setup number 1. Setup number 3 is about continuation trades, and we'll see how we applied this concept in the 5-minute chart, where we'll explain our entry method in that trade, which was not very easy. Also, setup number 5 deals with trades inside a price range. That is, when price trades inside the price range on the 25-minute chart, we can trade from the extremes of the range, that is from the top and from the bottom, and these trades are also very successful and very profitable. As you can see here on the 25-minute chart, a range has formed here by these 2 low pivots, which are an area of support, of course, and these 2 high pivots that forms an area of resistance here. So when price trades at the extreme of the range and cannot violate them on close, then we can take a range trade, that is a short trade from the top of the range or a long trade from the bottom of the range. As you can see here, when this bar, this high pivot reversal bar formed, it overshoots this resistance area but closed below it, inside the range. The same happens with this bar here. So this is a very clear sign that the range is strong, price cannot get out of the range, and we can consider trading to the short side because we are on the top of the range. So this trade combines these 3 setups, and this is why it's a very interesting case, besides being, of course, a very profitable trade. Let's now see what happens when price retraces to this resistance area here, and how a trader can be creative and in parallel objective and disciplined, and don't get trapped of the price action, and actually take the right decisions in live conditions. Let's go to the 5-minute chart now. As you can see here, when the first resistance bar was completed and price started retracing to that bar, we are searching for a lower high pivot and a short signal bar to go short. This is our first opportunity here because we have a lower high, a potential lower high at the moment these two bars were formed and completed, and also a bearish engulfing bar. So our plan is to trade one tick below the low of this bar here, and with a stop loss either 4 ticks above this potential high pivot or 4 ticks above this high pivot that has already been completed. As you can see, this signal bar never triggered, so we didn't trade at this moment here, and we waited for another chance. When this high pivot was completed, this was not a lower high pivot because, as you can see, it's higher than this pivot here. So we cannot use the concept that says that on the 5-minute chart we are looking for a lower high pivot to be formed in the common resistance area of the 25 and the 5-minute chart, and then a valid short signal. But then price went down, and we can see here this small bottoming tail bar that is formed, and that bar is a signal that price will react to the upside. When this bar triggers here and then fails, this is a very good sign that price will travel to the downside, and this is of course a signal to go short. But here we must be very patient, very objective, and follow our rules. As you can see here, this bar here, this low pivot bar, has formed a kind of support area. This is practically a weak support area, as you can see, but at the time this was formed, it was a support area. So our plan says that we never take an entry inside the support area on the 5-minute chart because it will probably fail. So even this long signal failure here was not a sign to go short, but when price violated on close here this low pivot, that was a valid breakdown. As you can see, we have a void to the downside here on the 5-minute chart, and of course there is a void on the 25-minute chart, so we can go short here at the breakdown of this low pivot. And now let's look about our trade management strategy, that it's very effective, and it also has very strict rules. As you can see here on the 25-minute chart, there is a big void to the downside, and of course our final target would be this support area here at approximately 1.1. This is a round number that makes this support area even stronger, and also this is called a major support area because it had produced a higher high. All these concepts are explained very clearly and very analytically in the home study course, and of course with many examples. So as you can see here, this area would be our final profit target area. Let's look again now at the 5-minute chart to see how we manage the trade. As I have also repeated many times, our trade management strategy tells us to split our position into two parts and take a first profit at our salary profit area, as we call it. That is an area which is related with the volatility of the specific contract, as it's shown here by this volatility indicator. And of course, our second profit target area is on a supply, on a demand or a support area on the 25-minute chart. So when we went short here, our first profit target was 6 points. As you can see here, the volatility is 4 points, approximately 4 points. It's 6 points in this first contract, and our second contract, or our second lot, had a profit target area at the area of 1.1 and zeros. So this is our second profit target area, and as you can see, price collapsed to the downside, and this area was reached very easily. In the home study course, there is a very certain strategy of how we can manage this trade here with pivots or with bearish dynamic bars. As you can see here, we had no pivots. So in the home study course, we explain very analytically how this trade could be managed, and of course we would never been stopped out, and the second target was achieved, I would say, rather easily, and of course this was a very profitable trade. Thank you very much for watching.